It's great to have your company for the weekly this Friday, the 28th of May. I'm Jessica Amir, a senior market analyst with Bell Direct. Well, that's May almost out of the way. The market rose 1% so far, firstly defying the odds because May is traditionally a negative month for equities, where the ASX 200 has fallen 0.5% on average. Secondly, it's important to note that Aussie equities have now made gains for 8 straight months. That's provided the market doesn't fall out of bed on Monday. So now the focus shifts to the rest of the year, and with that in mind we head to June. June is historically a pause and reflect type of month, where the ASX 200 has gained 0.1% on average. This is because investors are often rebalancing their portfolios for tax time, 30 June, either booking in losses to write them off against their gains or readjusting their portfolios. What do we mean by that? Well, they're buying stocks that have fallen and selling stocks that have made healthy gains. So that's pretty much what we saw this week. The tech sector rose the most for the second straight week, up 3.6% Monday to Thursday, with many investors taking a view that the sector is on its way for a recovery because bond yields have stabilised and inflation and interest rate concerns seem to be priced in. The best performer in the ASX 200 was Kogan, up 19% for KGN, followed by Hub24 HUB. Now, what else stood out? Lithium companies in a way. Pilbara Minerals PLS rose 12%, making it the third best performer in the ASX 200. PLS was also one of last year's best performers, up 233% on the ASX. So far in 2021, PLS is up 38%. Now, Pilbara recently formed a joint venture with a company called Calix, which is also listed on the ASX, to potentially build a spodumene processing facility which will turn the lithium mineral into product. After that announcement, 2 investment analyst firms stamped PLS as a stock to watch. Macquarie has got a $1.50 target, Canaccord a $1.45 bullseye. And on Thursday, PLS shares jumped 6% to $1.21. Staying in lithium, another one to watch is Galaxy Resources GXY. It was one of the best performers in the top 500 stocks. Now, GXY shares rose about 15% Monday to Thursday. They held their AGM this week and were then upgraded by Canaccord with a new $4.95 target. Keep in mind, Orocobre, ORE, and Galaxy GXY are planning to merge to create the 5th largest global lithium company. Interestingly, fund managers have actually been increasing their holdings in GXY, while one fund manager, Ausbil, holds a 9.4% stake in GXY. That was as at the 30th of April. Now, this leads us to the consideration for next week. Lithium. It's making big waves, so why not look at lithium stocks or even a lithium ETF if you simply want exposure to this broad theme? So consideration 1 is to think about the catalyst to invest in lithium stocks or ETFs. We all know the world is transitioning to carbon neutrality. For instance, the International Energy Agency, the IEA, which is made up about 29 countries, plans to be emission-free by 2050. So what does that mean? Well, expect EVs to be pushed. The United States is leading by example with electrified government fleets, and US President Biden proposes $1.7 billion in US spending towards climate change, while in China they've got $2 billion of EV stimulus, and in Europe, Norway and the Netherlands will ban petrol cars by 2035. So to keep up, car producers like VW, Ford, GM and BMW are scaling up EV production. And what's the biggest cost of an electric vehicle? Well, it's the lithium battery pack, making up 30% of the car's purchase price. So as EV car makers make more cars, they'll need to be buying a lot more lithium. That leads us to consideration 2. Did you know one of the best performing exchange traded funds or ETFs on the ASX is a lithium battery ETF with the code ACDC? Given the push to EVs, this ETF ACDC is doing pretty well. It's up 80% year on year. That's pretty attractive when compared to the ASX 200's 23% gain, while the US's S&P 500 is up about 40% over the same time. So what is this ETF ACDC? Well, it invests across about 30 of the world's leading lithium and battery companies, from companies like BMW and Tesla, who are producing electric vehicles, to investing in lithium miners like Pilbara Minerals and Galaxy Resources. And we're seeing investors increasingly use ETFs to gain exposure to baskets or bundles of global stocks on the ASX in one single trade. But consider it's pretty wise to take a long-term view with ETFs, just like you would with stocks. Now, moving to what to watch next week. It's a huge economic news week. The RBA holds their monthly interest rate decision meeting Tuesday. Rates expected to hold at 0.1%. The focus will be, though, on Wednesday's data. Economic growth for the quarter is released. Citi is expecting gross domestic product, or GDP, of just 0.3% from Jan to March. That's following the pretty hot 3.1% expansion in the fourth quarter of last year. And on Thursday, the balance of trade is out. That's Australia's imports versus exports. That data is out for April. And that's the weekly. If you've got any questions, please leave them in the comments section on YouTube. From all of us here at Bell Direct, have a happy and safe weekend. I'm Jessica Amir. Bye for now.